Traders think they have to be right more than half the time to grow their account. Sounds logical, but you know what? That's not always true. You could win only 40% of the time and still grow your account. And you could win 70% of the time and still lose. In this video, I'm going to explain how this works. I'm going to show you how to figure out your win rate. I'll tell you what mine is. And then I also have a tool to help you visualize it, how to grow your account with a fun simulator. The real question is not, is my win rate over 51%? The real question is, what is my win rate based on my average winning percentage and my average loss? I downloaded 18 months of trading data from my brokerage account, and then I uploaded it to ChatGPT. You can use Claude or Gemini or DeepSeek, whatever you want to use, and ask it, what is your average gain and what is your average loss? Those numbers can be real eye-opening. Turns out my average win, well, it's around 75%. And my average loss, well, it's about 49%. The reason for those numbers directly correlate to the type of trading that I do. I'm an overnight swing trader. I'm going for a bigger move. I'm trading the overnight gap. I buy at the end of the trading day and I sell in the morning. And I trade options overnight. However, I don't use systems that would lead to me losing more than I actually put into the market overnight. However, I do trade options that are closer to their expiration. So they're less expensive, but they are losing money a lot faster than, say, an option that has a day to expiration, say, 30 days or 60 days out. The ones I generally look at, well, they're about 2, 3, 4 days out at the most. But I will say for a lot of overnight swing traders, the 4 to 7 day expiration is kind of a sweet spot. So your average win and your average loss totally has to do with the type of trading that you're doing. My overnight swing trades can easily make 100%, 150, 200%. And my overnight losses can't be more than, well, 100%. But they do average out at about 50% loss. And based off of my real world history, I need a win rate of about 46% to be profitable. However, your win rate will probably be much different based off of what you trade. If you trade longer days till expiration, such as maybe 10, 20, or 30 days out, or perhaps you're trading leveraged ETFs or stock. Again, your win rate will be completely different based off of that. Your needed win rate will also depend on your skill. How good are you exiting the next day? Are you able to maximize your gains and minimize your losses, or do you just take what you get first thing in the morning? So the 51% myth, well, it's not true unless on average your win and your loss is about exactly the same. That's when it would be true. Otherwise, you need to figure out what your average percent win is and your average loss and then go from there. And for overnight swing trading, another lever that you have is your position size, and how good you are with your position size will also make a difference. Because maybe there are times where your confidence level is not as high, or you know there's a history that certain times in which the market acts a certain way, it just doesn't work in your favor. So maybe you put in a smaller position size. Knowing how to manage your account also plays an important role in your win rate. All right, I think you have the basic idea. Let's go to the simulator. We'll start off using my numbers, and we'll begin with $1,000. We'll leave the win rate at 50%. My average win is 75%. I probably wouldn't use 75 for my real world calculations. I'll explain that in a moment. My average loss being 49. So with this, the break even that I need based off of that is 40.3%. But again, I really don't use the 75 because that includes those outliers. I have some wins in there that were over 1,000%. But those are very rare. Most of them are different. So I can use other types of calculations. Like maybe say if you're using the AI, take off the 5 biggest losers and the 5 biggest gains, or something like that. And there actually, you can even ask the AI for different ways to calculate it based off of the data that you have downloaded, and it'll give you better insight. But what you see here is our growth pattern. And this is the line just basically doing math over 1 year to 250 trades. I would have $4,487. And so the verdict is that it grows, but you can come down a little bit further and see where those break-even points are along the way, and based off of maybe your goal. Yes, these are mathematical, but remember, there are a lot of factors in play in this process. So just use these numbers as a general guidance. Back up, we have some other ways to look at this. And this line represents a geometric path, which isn't really reality. It's more of the random path. And as you can see, ups and downs, it's not a straight line. You have to weather through the storms. Sometimes you're just going along sideways for a while. Then you get some nice wins and you get some losses. And then over a series of 250 trades over a year or so, hopefully, if all goes well and you manage your account well, your signal does well, hey, you could be in the plus column. And worthy of noting is this sample win rate. It's 47.2. If you want, you can take a look and see how it does by re-rolling, see how it looks in different variations, and you can see different numbers. Or you can click on Monte Carlo. What that means is it's going to do this 100 times, and then it's going to smooth it out, and you can see the variation. Here's the mid-range. Here's if things go really, really well, and here things not going so well down here. But it still seems positive. Now, as I mentioned, I would not use the 75%. I actually figured that 65% was a better number, or 64, I think it was. That was more closer to the median. You can use median, but it depends. You should look at your median, but that doesn't always represent your trading, like average doesn't always represent your trading. So you'll have to try it a few ways to get a good sense of what you're comfortable with as reality. Now, my average loss, no matter how I ran it, it was generally about the same, 47, 48, 49. And another lever we have is position size, 5%. A lot of traders use 1 to 2 to 3%. Maybe you use 10%. But just know if you have a bad streak, your account's going to go down a lot faster. But it can also go up faster. It all depends, honestly, on your risk tolerance, and you can just play with these numbers. That's why this is here. You can see where you're comfortable. Geometric path, random path, Monte Carlo. I like looking at the Monte Carlo. Win rate 55. Okay, so let's see. So 44, 47. So how I've figured this before was, again, my last look was around 46, but I guess it all will depend on how I play with the numbers. So if I'm down to a 48% win rate, I could have drawn down pretty big. You could base this off of, say, 90 days or 120 days. You can look at different win rates. What does it look like if you're 60% correct? Reroll. How about 60% correct over a year? And again, you can look here to see what your break-even win rates are, because obviously you want to be above that. But if you're closer to a 44, even 45, you're probably going to have some serious drawdown, so that's something to consider too. Let's take a look. Yeah, see? This example's 45. It says the break-even's 44.7, but this one was a loss. Reroll. See, we're up there, re-roll, see. But then do Monte Carlo, you'll get to see of the average, and see the average is a little bit higher, but this is mostly break even. And as you can see, the max drawdown was 61% during this time. And yes, you can increase and decrease the starting balance. You could use 10,000, 20,000, whatever you want. And it's free to use over at spytomorrow.com. So as you can see, over time, the little decisions that you make compound. So Doing little things to maximize your gains or minimize your losses, your position sizes, being smart, not just trying to double down or make up. Just stick with the plan, but use real world numbers. Pay attention. Download your information. Now, you don't have to upload it to an AI. You can figure it out by hand. Put it in a spreadsheet. Do whatever you can to get a good idea of what that average win is. What is that average loss? And figure out where you need to be successful. And then make judgments based off of that information. So you don't need over 50% to be a winner, but you should have a signal that's well above the number that you need, such as 60 or 70 or 80% correct on average, because you have to also consider human error or things just not going right or just not exiting well. Sometimes the indicator is technically right, but maybe you got out early or stayed in too long. Those things happen, and so you need to have that cushion. And if you're curious about how well the SPY Tomorrow algorithm is doing right now, you just head on over to spytomorrow.com, look down at the bottom page, and you can see the last recent 20 pressure readings as well as the morning results. And this is another good reason why it's helpful to keep a journal so you can see what has worked and what has not worked in the past and what little adjustments you can make along the way to continuously improve, maximizing those wins, minimizing those losses, again, through small actions and adjustments along the way. There are a number of things you can't control overnight, but what you can control are your position sizes. You can control what it is that you're trading overnight, such as ETF stocks or options. And just because we're using the SPY Tomorrow signal doesn't mean you can't trade, say, other stocks or ETFs. I'll often trade QQQ or IWM based off of the SPY signal. So now we know for overnight swing trading and all types of trading, you don't need to be 60, 70, or 80% correct to be profitable over time. But it is over time. You're going to have ups and downs, win streaks and losing streaks, and you have to play the numbers. Hey, if you want to play with those numbers, I'll put a link to that simulator in the description below, and I'll see you in the next video.